Hello and welcome to today's episode of On the Mark Financial Literacy with Mark Zinman. We have Alicia and Pudgy with us today. Hello, Alicia.
Hi, good afternoon.
Maybe you want to tell everybody who Pudgy is.
Everyone knows who Pudgy is.
Should he be our mascot?
He's our mascot. And we have Mark with us, of course. Hello, Mark. How are you today?
Good morning. How's everybody?
So today we are talking about insurance for small business owners. Yes. And we're going to start today's episode by talking about the importance of having a broker that you trust and can rely upon to help you with your insurance needs. Do you want to start with providing an introduction about the difference between an insurance carrier and an insurance broker?
Okay, so there's a few things. First of all, we keep talking in our different things as we come upon the topic that you need to build yourself a financial team. And one of them in the business world would be an insurance broker. Okay, and I'm going to differentiate a little bit between an insurance broker and an insurance agent. So an insurance broker, in my mind, is someone who represents various carriers and therefore can place your insurance based on industry and type of insurance across multiple carriers, as opposed to maybe, say, a captured insurance like an Allstate or a Nationwide, where somebody just represents that one brand and is sort of a fit-all. I would call that person an agent versus a broker. Mm-hmm. Okay, and the importance of having an insurance broker is because you want to make sure that there's not some type of a loss that you can incur in your business for which you could have had coverage had you known about it and did not have it. It's different than saying you could have had coverage and you chose not to have it, as opposed to not knowing you had it.
Absolutely.
And that's the important thing. You know, we are going to always talk to our business clients and our business listeners about what best practices are. And the job here is to make sure they understand everything, and then they know the risks of not having or having something.
And we talked in an earlier episode about the value that a really good insurance broker can bring to your organization, and should there, in the event of a claim, can really fight for you. So we don't want to minimize the very important role that the broker plays in that relationship.
Yes, and you want a broker who's going to be active in, if you ever have a claim, is going to be active and work with you to represent your interest with the insurance company, because you can get, any kind of loss you have is going to be somewhat emotional. Mm-hmm. There's going to be maybe conflicts of what your values are, and it's never pleasant to have an insurance claim, no matter what kind of claim it is. So whoever's going to represent that you get the right coverages, and then represent you with the right company, and then represent that they're going to fight for you, is who you want.
Okay, well, to that end, regarding having the right coverages, we're just going to tick down a list of common insurance policies that every small business owner should have, or at least consider. And we'll start with general liability. Okay,
well, general liability is the basis of everything. It's the liability that you have. It's on a homeowner's insurance policy, it would be that liability for slip and fall. Now, the thing to keep in mind is that just like in car insurance and just like in homeowners insurance, there's different limits of liability. What you need to maybe know here is that maybe your landlord or your bank's going to expect a certain amount of liability insurance. And it's not necessarily if you had a liability of $300,000 going to $600,000 or $1 million, doesn't double and triple it. It's just a matter of having, and a lot of this is packaged together. So, different types of limits within the policy might dictate, and then you just have to adjust to maybe what you want. And the broker will help you with that.
Okay, so bodily injury, property damage, damage to your reputation.
General liability is just that. It's anything that we're not going to specifically identify in other types of insurance that we're going to discuss.
Commercial property.
So commercial property is sort of like a homeowner's policy, right? Back into the homeowner's policy. If you own or rent, it might be different. The landlord might be involved in having to be a name insured in that, and then you might be required to have certain limits. Some of the limits in here for what you would consider contents on a house. This might be your machinery or thing. You may want to consider what comes with the policy versus what you have. Obviously, replacement cost is something you want versus depreciated value. And again, these are more common policies that your broker would sell you, but just you need to know what you're asking for and what you're reading.
So here we're talking about equipment, inventory, theft, vandalism, fire. Okay. Business interruption.
This is one of those optional ones. So business interruption has two parts to it. Well, let's just talk about business interruption. You have a fire. they close the road down, something where you can no longer operate for some period of time, this insurance would replace the sales that you lost.
Don't go anywhere. We'll be right back after a quick break from today's sponsor.
Looking for trusted expertise in intellectual property law? Trust the experience of Howson & Howson, proudly serving innovators and creators since 1853. With over 170 years of expertise, our team protects what matters most, your ideas. At Howson & Howson, we specialize in patents, trademarks, copyrights and provide deep industry insight in industrial chemistry, engineering, and life sciences. Ready to secure your intellectual property? Visit HowsonIPLaw.com or call us today at 215-540-9200. Howson & Howson, protecting innovation since 1853.
Yeah, so we had a client who, where their storefront was located, they were making some improvements to the infrastructure and their business was closed down for a period of time. So that's where business interruption insurance may come into play.
Or you have a fire, it covers the fire, but it doesn't cover the loss of income.
Or any type of natural disaster.
Right.
Okay. Professional liability insurance, E&O, errors and omissions.
So it's called different things in accounting and law, it's called malpractice. In real estate and maybe financial services, it's called errors and omissions insurance. This is for acts of professional work that you may be sued on for your advice or your recommendation. You feel like your insurance person misled you on the coverage, then you might sue your insurance person, and that would be his E&O. I'm not suggesting, I'm just giving you an example. Hopefully, almost every professional carries some type of liability insurance for their actions. It'd be rare that you don't. A lot of states may require you have it. But yeah, again, you want to insure for anything that you can't control, and you can't control if somebody thinks that you did a bad job.
Right, acts of potential negligence, for example. Okay. EPLI, employment practices liability insurance.
One of the more important ones, and you can speak to that as our HR person here. It was called, years ago it was sexual harassment insurance. Now it's basically workplace involved things, and it can be anything. I mean, we could sit here, probably you and I, and have a 3-hour discussion of all the different examples of claims that we've heard that were totally not the fault of the business owner and completely out of their hands. From somebody telling a joke that another employee found offensive to, I remember having an issue where people in a warehouse, the clerk in the warehouse felt the radio was too loud, the person in the warehouse felt that the radio was fine, and this happened to be an engineering firm. I just like this one. So he went out with a decimeter and determined how many decibels the music was and said it was within the normal range, but still the person complained. So it's just like anything else. They could have a suit, and it could be an invalid suit, and the cost of a lawsuit or a claim isn't the expense of paying out the claim, it's the expense of defending the claim. I will share in my professional career, I've had a number of issues. Like anybody who's been in business for 40 years, don't think we ever actually paid a claim out, but we've had to defend ourselves. But it could have been two clients fighting over something and then bought me in. It could be that simple. It doesn't have to be anything you do. And it's very important to have that type of insurance if you're in an industry in which that's something that's a lot of industries.
Right, so we have wrongful termination, discrimination, sexual harassment falling into this category. Okay.
If you have an employee, you need it.
Yeah. Cyber.
This one is become almost a must. It was maybe elective a few years ago. You might say, so there's a couple levels that you have to do. One is PII or personal information. So somebody like me, an accountant, we have people's social security numbers, we have addresses, we have credit information. That may be the same in a retail establishment. We hear about all these cyber breaches. There are a number of them, and it could be affecting not only, they may not be affecting you, they could go after software you're using that then affects you. And the problem is that there are a lot of state regulations now still on how you have to manage these type of breaches. It could be ransomware, it could be anything, and it could flow into anything. Like, okay, we've talked about business interruption insurance. Well, you could get a cyber attack where you can't work for days. So now you have both clicking in. This is a must. And I know that I think my malpractice insurance now asks me a question if I have cyber insurance, which is something new. Like every year, I get last year's questions, this year's questions. I think they're starting to make sure that you have that kind of thing because of the kind of information we have.
And our organization provides training to employers and their workforce on how to be aware of, likely cyber attacks and vulnerabilities. But this policy would cover data breaches, other cyber attacks.
And I'll say, there's no defense like having good communication. Like our staff here knows if to read the name of who sent the email, if it's something that looks weird, like here's a copy of your message that you just had, and you don't recognize the message, don't open it. And it's also good in this to recommend you should have a good IT person. So I'm not an expert. I mean, it might look weird to me, and we send it to the IT person and say, what do we do? And a lot of it's just don't open it, but we want to make sure we don't have a breach or an infection or something that's going to affect our clients, and anybody who's in any business where they have a computer, and that's virtually anything now, needs that kind of insurance.
Workers' comp, required.
That's a state requirement, almost in every state that you have workers' comp. Most of the rates are set by the state. In a lot of cases, the rate's affected by, the rate is obviously affected by the industry you're in, and in prior losses you might have had. So this is where safety training comes into effect. Making sure that you have good reporting things, having a good handbook. But yeah, this is a requirement. Now, I will say that I have a preference on workers' comp that maybe is different than others. So you can get workers' comp from your insurance broker. Most payroll companies offer what they call pay-as-you-go workers' comp. That is my preference for most businesses, especially small business. And the reason why is when you buy workers' comp, you're usually representing to the insurance company through your broker that you have this much gross payroll in this category. And then they base the annual premium on that, and you pay it out over 9 months. And at the end of your policy period, you get an audit. And the audit it's not an audit like a tax audit. It's not like how much did you say you were going to have in payroll versus how much you had. Reconciliation, good word. But they call it an audit, which confuses everybody. Yep. But it's a reconciliation, and then they will either credit you or bill you the difference. 9 out of 10 times you owe money. 9 out of 10 times your payroll's higher, you give people raises. From a cash flow management point of view, the pay-as-you-go is better. What the pay-as-you-go is every time you're on payroll, and it depends on your frequency, every time you're on payroll, the payroll company sends a electronic file to the payroll or to the insurance broker, which is a different broker than you have. It's just an intermediary, and they will then bill you. So I know, for example, at our office, I pay our payroll on Tuesday or Wednesday of next week. Payroll's on Friday. I get a note that they're going to debit my account for this much money. It has a calculation, and they debit it. And at the end of the year, it's really weird, especially for somebody who's ever done a workers' comp audit. You get all these pieces of paper. They want you to write down everything. It's a lot of work to do a workers' comp payroll reconciliation audit. I get a letter in the mail, you owe $15, you're getting $30 back. It's just there's really no work. So you're saving money. You're saving money in the sense that you pay what you need when you need to. You're managing cash flow because you're not paying it on 9 months, you're paying over 12 months. And you're also managing cash flow because you're not going to have a big lump at the end, or one way or the other. So I'm really big on pay-as-you-go workers' comp. Workers' comp insurance is not optional. The only part that is optional is that in some states, if not all, the owners, if you own more than 20% of the stock of a company, you can opt out. Our recommendation is that you don't. It's very, very cheap disability insurance.
And could we just sidebar for a moment on the difference, because we know from some of our clients there's confusion on the difference between when someone might have a workers' comp claim and when someone might go out on short-term disability. They're very different events. Do you want to just speak to that?
So short-term disability would be something medical that is not related to your employment, right, as opposed to workers' comp, which would be. So if you had somebody who had surgery, not related to an injury on the, right, it could be, I was going to say back surgery, but then maybe but not some kind of surgery that was not related to the work. And it could even be pregnancy. A lot of times states will include pregnancy as part of short-term disability. Mm-hmm. Then that is a separate policy, not necessarily a policy issued by the company.
Right.
There are a lot of companies, and we could talk about this maybe separately, and it's probably more the health realm that offer short-term disability, long-term disability, maybe some life insurance to their employees, but it's not part of the necessary risk that you would do that we're talking about in this episode.
Right. So workers' comp is specifically for a work-related injury or illness, whereas short-term disability is not.
Right, and workers' comp gets a lot more involved. You may have somebody who actually gets cut at work, and you want to send them to an urgent care, and that is a workers' comp claim. It may not be they're out of work, but it's still a workers' comp claim. And the insurance company will help you through all these. A good HR specialist would help you with manage these. And you also, in certain industries, maybe not so much in an office environment, something more active, maybe with a warehouse, you're going to have a lot more need to have safety training and safety protocols in place to both to minimize your risk, and also, in a lot of cases, the safety programs that you have in place are almost like having an alarm in your house for homeowners. There may be discounts involved in that insurance for having certain process in place to minimize the risk.
Yeah. So we do a lot of risk assessment within our organization, and it's been my practice to make decisions through the likelihood and consequences scale. So if the likelihood that there may be an event is greater than 25%, we consider that high likelihood. And if the consequences are severe, that's something that you need to address sooner rather than later. So likelihood and consequences, which is a lens through which you might make your insurance decisions through as well. Okay. Commercial auto.
This is a good one. So commercial auto is automobile insurance on company cars. And this is a very involved topic. Okay, and I want to try and do it simplistic. If you own a vehicle and somebody else is driving it who works for you, you want that vehicle owned by the company or leased by the company, and you need to have commercial auto insurance. Okay, if you're the owner of a company and your company's paying for your car, but you're the only one that drives it, we recommend that car stay in the name of the individual and stay on your individual insurance. And here's the reason why. If you gave an employee a car to drive and they got in an accident, it would go on your insurance because you gave them a car. But they could also have workers' comp claim part of it if it's in their normal, they got injured. It could have issues with liability for third parties. So we definitely don't want an employee or a non-family member to be driving a vehicle that's not titled in the name of the car, of the company. And we have clients that have, vans that are out in the field, and then the owner has a car. Okay, and one's titled in the owner's name and under personal insurance, the other one's titled in the name of the company and under commercial auto insurance.
Product liability insurance.
This is more, especially if you had a certain product that you had out there and there was a risk to that you couldn't manage. Now remember, insurance is set to kick in at an amount where it's hard for you to manage. That's called a deductible, right? So all these things we're talking about, and we really didn't talk about it, is a deductible. You get $1,000, $5,000, $10,000, it can be anything. And the higher the deductible, the less the insurance will be because you're responsible for that stub part. So like, malpractice could be $5,000, $10,000, $20,000. And because the insurance companies know that some of these claims are small and you're going to pay the first ones, then they're willing to reduce the insurance. So it's cost versus benefit versus risk. And product liability is one of those ones. It would be specific to the industry that you're in. People who have malpractice insurance or E&O wouldn't have product liability because they're sort of different kinds of companies. And I would say honestly that every client that has a product doesn't have product liability insurance. It depends on what the risk is.
Okay.
But that good topic for your broker.
Fidelity insurance.
Fidelity insurance is two types of things. One is if not included in another type of insurance, it could be employee dishonesty. Okay. In some cases, there is some basic employee dishonesty and general liability, but you could want a higher threshold, so that'd be a separate policy. A lot of small businesses, mine included, have retirement accounts, and you have to get what's called a Fidelity bond, which ensures that there wouldn't be any fiduciary risk. In a nonprofit, it's like officers insurance, so it's sort of the same kind of thing. But you'll be told whether or not you need it, and for the most part, Fidelity insurance is relatively inexpensive.
Our last one, before we talk about some other considerations, home-based business insurance.
This is one that people don't think about. So we talk about general liability, we talk about commercial property. They're all people in non-residential, you're in an office building or in a warehouse. What happens if you decide to have your business out of your home and you have some specialized equipment or something else in your home that would be outside of what one would expect to find in a home? Then you might want to contact your homeowner's insurance and get a rider to cover the value or the risk or the liability of that.
And you were touching on limits and deductibles, right? And we were talking about the cost-benefit ratio. Do you also want to talk about exclusions and limitations? These are other considerations when you are making your decisions.
Right. So what would an exclusion be? It could be an act of God, an earthquake, a hurricane. There could be different kinds of exclusions. There could be exclusions for different types of work that you do. Like we'll cover this, but we won't cover that. And that's usually based upon the risk. So we talked about workers' comp. Well, a roofer would be higher than an office worker, right? Mm-hmm. So maybe, not that they wouldn't workers' comp, I'm just trying to give an example unless you have a better one. Maybe they would say, well, we'll cover your office people, but we're not going to cover your roofers because there's just too much risk. Or you're hearing an athlete. They have a contract or some type of performance team, but they can't jump out of an airplane, right? Or they can't be riding a motorcycle. Right? And those are different kinds of exclusions and again, you talk to your broker about that.
And then there are some state and federal regulations, there are some industry-specific regulations, and there are some, you mentioned financial institutions. Your lender may have some requirements for you as well. So sometimes, these decisions that you're talking about, some are mandatory, some are optional. Those that fall into the optional category may not be optional. For example, if your lender requires that you have a certain policy in place. Do you want to speak about that?
We talked about lender could require you to have life insurance. Mm-hmm. If it's a business where you are the generator of the income, they might be required to have life insurance. And that's not necessarily business insurance, it's just for the business, right? But yeah, people out there who are in the contracting business, they know they got to give certificates of insurance. It's the same thing in a more professional setting. It would be just having a name insured. Your landlord's a name insured. The bank's a name. We see it all the time on cars, right? You go out and you buy a car, and you have Bank of America's financing it, and you have to name them as a lost payee on your insurance. It's the same thing in business.
Is there anything else you want to add before we call?
Yeah, I do. So just like you become really close with all your advisors, the one exception I'll say on a business broker is we do recommend to our clients that every 3 or 4 years they shop their insurance. It's not necessarily to find somebody new, and if your insurance agent a broker is doing the right job, they're asking you questions every year to monitor the changes in your business. While the types of insurance that we discussed are very general and apply across, the limits and what you might have is depending on your specific business, not necessarily industry, but it could be your specific business. And one of the things that we see often out there is people who have gotten policies, their business has changed and the insurance hasn't changed with it. The other thing is, cost. People shop on cost for just about everything, me included. But when it comes to insurance, it's cost versus coverage, right? So a policy that has better coverage is probably going to cost more, but then you have to value that difference to whether or not that risk that it's insuring is worth it to you to be able to sleep at night, to have the reserves, whatever. We did it in our early episode. We talked about life insurance, right? How much life insurance do you need? You need enough life insurance to insure your economic loss. How much insurance do you need for your business? You need to insure the excess over what you can afford to lose. In most cases, we call that the deductible, but it could also be the type of insurance you coverage as well, right?
That's a very strong way to put it. And we were talking earlier, about different types of policies that a small business may need and the evolution of cyber insurance over the last several years. And we've had, some clients that have had some breaches, and if it's cyber insurance is definitely something that sometimes there is some confusion as to what is covered and what is not. It speaks to the importance of being very intentional when you're completing your applications and making sure that your broker has a very strong understanding of the nature of the work that you do so that your risks are adequately covered. And when it relates to a cyber attack, when you look at the likelihood and consequences scale, every small business really does need this type of coverage.
Just as important having cyber insurance is having an infrastructure built into your business that protects client data and protects your business. We're so automated nowadays in almost every industry that the loss of the ability to use our technology will close. I mean, every restaurant has a POS system. You know, they don't. It's rare when you almost feel like you're going into stepping back in time when the waitress writes the meal on a check, right, instead of on a pad.
Everything's in. If you use Toast or a different POS system, we were just talking about this the other day. It's starting inventory, it's recipes, so you have your per unit costs. It is your sales, it's your ending inventory. But to your point,
And the risk there, just so you know, the risk is that something could happen to Toast.
yeah,
The risk is something could happen to your tax software.
Yeah.
It doesn't have to be your particular computer, but you have to try and solve for that risk and manage it. And having, I think, just as important, if we're talking about this from a small business point of view, of having an IT person that understands your business.
as we liaise with insurance brokers, but cyber insurance, just to come full circle, seems to be the one where there's the most questions on the part of the clients. And so you were talking about selling the difference between selling a product and a service, and either one, you're going to have, you were talking about PII, personally identifiable information, or PHI, you just, nonetheless, this information is yours to protect.
Medical, it got HIPAA.
Right.
So it's the same time, it's even hard, it's PII with even that extra layer of having to protect medical documents.
PHI or EPHI, absolutely.
And in the medical practice, almost everyone has a patient portal, which is always a risk. A lot of businesses have portals you can log on to. Even my insurance broker has a portal I can log on to download my policies.
Well, thank you so much for providing an introduction to insurance policies that every small business owner should be aware of and have and make informed, intentional decisions. We want to thank everybody for tuning into today's episode, and let us know your thoughts below, and don't forget to like the video and subscribe to the channel. We hope everybody has a good rest of their day, and we will see you next Wednesday. All content provided on this podcast is for informational purposes only. No representations are made as to the accuracy or completeness of information that is presented. On the mark, its owners, collaborators, and guests will not be liable for any errors or omissions, nor for any losses, injuries, or damages from the use of this information.